To be quite honest with you, we haven't really changed our bias at this stage. We're looking very much at the big picture around global growth, but obviously risks have been increasing over the last number of months, and we're certainly moving to a slightly more defensive bias in regards to our equity exposures. But look, all markets can do at this stage is go with the polls. We know that the polls haven't been 100% accurate over the last very meaningful referendums or elections, such as the US election and Brexit. But at this stage, as you've summarised, it does look like the Democrats will get the House but not the Senate. Now, if that's the case, we would be expecting the House to be a lot more combative, and the legislative agenda for the Trump administration will be under a lot more pressure. So markets will have to take that into account. On the positive side, if the news is right that China is going to come to the table in regards to trade negotiations, some of those headwinds, in particular for emerging markets in Asia, might start to be offset or somewhat eased. But at the end of the day, we cannot avoid the fact that global growth remains intact. The numbers out of the US remain pretty solid, obviously those employment and wages numbers, and that gives us some degree of comfort that we've still got some ways to go in regards to equity market rallies.
Yes, Martin, when you talk about the trade tensions, I mean, China Vice President Wang there saying that they are ready in some ways to talk is the line we have today. But when it comes to President Trump and his team, do you think we'll see any difference in their approach to China trade post-midterms?
Well, we haven't done in the past, really. The narrative from the Trump administration continues to be very, very strong right up to when negotiations have been concluded. We'd expect probably the same. I guess more importantly, the Chinese have really taken probably a more considered approach with their much longer 20 or 30-year vision, and they'll negotiate at the time and place and on their terms that suits that vision. There's no doubt there will be some compromise, as there always has to be. The Chinese are clearly wanting to move more towards a market-styled economy, but with Chinese characters, as is their words. So it may well be that an agreement is not in the offing in the immediate future, but at least we'd like to think that negotiations will continue to take place, albeit protracted.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.